What's up guys, welcome to the channel. In this video we're going to talk about 3 mistakes people or beginners make while charting or looking for trades. Like and subscribe, I really appreciate that. We're reaching the 100 subscribers, that would be awesome to hit that anytime soon. And let's get into the video. So 3 major mistakes people make, let's get into it already. I'm just going to start with maybe an obvious one, but people see the bias or find the bias or the trend, whatever you want to call it, and just think I need to follow the trend. And this is partially good because many people ignore that part and then just in a downtrend only long or vice versa, and that's also not good. But let's say this, we're obviously in a downtrend. This is the 1 hour on Bitcoin now. We're obviously in a downtrend, the levels don't really matter, but of course it's better to look for shorts than longs because the probability is just higher. Trend is your friend, that's true, but there's surely long opportunities here. Like you see here, price sweep something, was a nice level, valid level. You didn't have to be the best profitable trader to see that, and you have a 6% pump, and you have that here as well. When price is in a strong downtrend and it really keeps dropping like this, 20% almost in what, like 1-2 weeks, then you see, of course, in a normal trend, when you have levels, not every level gets respected or shows the best reaction. But when price dumps that much, you have like very important levels and then they really show reaction. So don't try to short every opportunity, just try to maybe catch the longs. Still, of course, shorts is a primarily trade you should be looking for. Next thing, which is still this topic with the bias, your shorts come from above and your longs come from below. So yes, price can surely continue to trend and dump to this $58,000, $59,000 tomorrow. So shorting here would be a profitable trade and would be a good idea. But the shorts were already given here, 20%, 18% dump already here. So yes, you can short, but know that the best shorts are already given. All small people, all small money is already in trade, so you're lacking behind. You can still take the short, but just understand that we're already down 20%. We can drop another 20%, I'm not saying that, and then if people just say, oh, it looks down, I'm going to short here, and they make money because price drops even more, they're going to say, huh, smartass, look, I made money. And that's true, but the probability of a short working out is just dropping lower, lower and lower. It's still, I guess, more probable than a long in this extreme downtrend, but I hope you get what I mean. The second thing is when people chart or zoom in. Of course, I set my levels, this is on a 1 hour. But if I want to trade today, I want to look for a trade. Of course, you can force trades, but if I want to actually look for trades right now, I'm not going to wait for another hourly candle to close. I'm going to zoom in 15 minutes or even 3 minutes. You can look what is happening here and you can draw your levels. Let's say you're just charting like you would on a bigger time frame. You have here your failure, or got already swept. Perfect setup, by the way. Let's take another level, for example, this level, I'm just drawing random levels, by the way, this level, and then you see candlesticks moving and you think, okay, yeah, this is a failure, I can short that, and then you're just so zoomed in the 3 minutes that your brain, or you don't realize that this is just a 3 minute, this is just price action from today. These levels are, I wouldn't say worthless, but the probability is not as high as a level on the high time frame. So you think, oh, this is a failure, I can short this is a good setup, and then price just bursts through your level. And then you argue, or then you think, huh, what happened? And then, oh, I'm on 3 minutes, let me zoom out. Oh, what am I doing? You get what I mean? And this is a mistake a lot of beginners make, because beginners, they want to trade, they want to make money, or at least see money going up and down on their balance when they trade. So they really zoom in and want to force trades. I want to take 100 trades in one day and say like, okay, this is a setup. You know what? This is also a level. But this is a hold. Because we made a new low here, we gained, and we hold. This is hold. Now let me long here. Okay, so when we're here, we're going to long. Okay, like that. And that's how we get too zoomed in, and you're going to lose so many trades. I'm not saying you can't trade on a lower time frame, but if you're a beginner, you can't do that. You can't do that, not according to the rules, but just according to your money. You're going to lose everything, and you can just agree and think, okay, thanks for the tip, or you can actually start doing it and lose all your money. That's up to you. I'm just here telling you mistakes I made and things I'm talking about from experience. And then the last thing, the third thing, I know it's going to be a short video, but I want these 3 points to be sharp and clear because they're important, and I hope you guys remember them. And it really connects with this, but I can remove the setups. Having too many levels. Like, not everything is a level. Like I said with my last level here, we gain something, we hold something. Does this hold really mean anything? Of course it's on a 3 minute, but let's say this is the chart on a 1 hour even. This holds. They didn't really gain anything, it's a weak reaction. This is not a place where liquidity lays. This is not a place where we'll see something get waked, or this is not a relevant level. And then you start indicating every hold, because holds, of course, or failures in the other direction are like pretty easy to spot, surely if you're a little bit more than just a beginner. So then you like, oh look, this is a high, then this is a failure. Look, we have a hold here, we have a hold here, oh we gained, oh this is a hold, and then this is also a hold because we gained something and we hold, and price didn't show reaction. But let me see, but let me zoom out a bit, because oh we hold something here, so that's also a level. Let me see. Oh, this is a high. Oh, so this is also failure. Okay, so all these levels, and what if you're seeing right now? And this doesn't have to be on a 1 hour, but also on a 3 minute. What is this? Now, genuinely, what is this? And I know, and I don't want you to feel called out or attacked, but there are people, maybe you are trading like this, and then they think, oh, why can't I progress? Trading is a scam. My strategy is not good. Let me switch strategy, learn for a month again, and then make stupid mistakes again and still be unprofitable. And okay, maybe this is a bit too much. Let me remove some. But still, this is way too much. And even if you're in the lower time frame, this is a region of what? 2%? Okay, a little bit more. Let's say this range, 4%. Okay, it's a bit more, but still, there are just way too many levels. And let me remove all of them for a second and zoom out. And I'm not saying my charting is the best. I'm not saying that. Is this also gone? I'm just saying, if you zoom out here, the 4 hour, you also say, oh Siri, you have way too many levels. Look at this. But this is stretched out on 80%, 100%. Because if you see if you see someone doing this and you think, oh what is this? He has way too many levels, then you're not getting the point. If I zoom in on the 1 hour and I zoom into what's actually happening, it looks completely healthy. It looks structural. Like we know, okay, we create a low here. We really have to hold this, or we make new lows. This, I don't know if this is a valid level though. No, this is not a valid level. We know, oh, this next level we really have to gain this to make sure we can continue, or we can reverse some trend. And then the next stop is this, and this box is very important because it's something on a higher time frame. And this level below us is very critical. I even marked it, so it's very structural. And this is maybe not as important for trading, but more like when you want to understand the whole picture. But still, for trading, it's important because this level will have a higher probability. This level is necessarily not an entry, but a point of interest where you can say, when price comes here, I can zoom in on a 3 minute and look for a long, or look for a continuation short. So way too many levels is not useful for anything. And if you struggle with that, I would rather that you use it as POIs, point of interest, like I just said, and don't just put a long here and on this level and that. No, just use it as a point of interest. When price goes there, you remove the level. Very important, you remove the level, zoom in on the 3 minute, 5 minute, 15 minute, whatever you trade, and then analyze on there. Like, why did I mark this level? Oh, it's a hold, or it's a origin zone, or it was an important failure. Let me see what price is locally, and then I can maybe take a trade. But too many levels is never good, and there's not like one valid number. You need to have so many levels inside that percentage of price. You just have to find a nice way in the middle. But I think if you really analyze your chart and you think critically about yourself, I think you realize whether you have or do not have too many levels. For now, that was it. Wasn't my longest or my maybe most interesting video, but 3 tips surely beginners struggle with. I hope it helps you something, and if you still have questions, surely leave them in the comments or join the Discord. I'm always active there. And I thank you guys for watching, and I'll see you guys in the next video. Bye.